to the Trading Market Technicals morning call video for Friday, April 26th. Markets continue to grind higher. We have the Dow up 24.5, Nasdaq up 17. Gold continues to reverse on a dead cat bounce, actually a violent dead cat bounce to the upside, up 22, and the dollar down 16 cents. So we did get a little bit of follow through, continued follow through from last Friday. So we have been rallying for a full week, and the markets are now at its highs again. Not quite there, but I'll show you that to you in the video. And this video is gonna be a short video, and I want to look at the NYMO, which is in front of you, and then we're going to dial down to the S&P 500. I'm not going to keep it really simple today because today is GDP. Now today's going to be a big day as well because that's going to really put the tune in this markets here. Now the markets have shrugged off lots of bad news, a lot of bad earnings that have come out, sort of in line, and guidances have been worse than expected. But yet the markets continue to find support, and I mentioned that to you a couple days ago. Why the markets are finding support, but it can only do that for so long. And do I think we go to new highs? It's very possible. I would not doubt this market at all. Nor would I put my money against the market. We look to trade the trend, and that's going to be the best way to make money and pull money out of these markets. Now, for guys like us, we're sitting in front of screens all day. The last several days have been really, really quiet. If you found something and you worked on it and you worked it hard during the day and you got every penny out of the market, that's great. But if you're kind of looking around and nothing passes by your screen, it's a little difficult the last few days. And yesterday in particular, we had a very, very choppy trading session. We did pop up, and then right around lunchtime, we started to roll over ever so slightly, and then kind of flatlined into the close. So not a real good trading session, nor was the last couple of trading sessions for that matter. So let's get into the charts. I'm just going to show you a couple of things today. We're going to keep it short and sweet for Friday because GDP is coming out, and then we should really open the door for next week and going into May, if this trend will continue or not. All right, so now we have our NYMO, right? Our McClellan oscillator, very good reader of overbought, oversold conditions. Now we're not really there yet, but we are at the 35 level. Another big thrust up, if we were to get one today, would put us in an overbought state. Now again, overbought does not mean that it's you would go run out and buy puts or look to short the market, but you would wait and see if we get back up to this. Now, if we get up to these readings up in here like this area here or here, it would entice me to start legging into a short position. No question about it, especially at these lofty levels. Okay, that's the NYMO. Now let's get into the charts, and I want to talk a little bit about the S&P. Now here are the spiders, and I did mention yesterday would be a pretty big day. Now, today's still going to be a big day, and I'm going to say why. Because yesterday, really nothing much happened. We still have a little bit of a doji candle here, more of a spinning top, excuse me. But we are at the highs, and we did make a lower high from this previous high. We're still at a lower high. So you could see that we did unwind our overbought reading from the sell-off 2 weeks ago. And now last week, we kind of retraced almost all of that, which I do think is still bullish, and I think the market is still in a strong uptrend. But you have to be nimble enough to realize that we are at lofty levels. We're back up here at the second time, and I don't think the markets just explode to the upside. I think the markets pull back again now. It could pull back to the 50 and make another higher low off this low, and then reverse course and go higher. Time will tell. We don't know that, but I just want you to be aware that we are here. And then what does this look like? This looks like more of an M pattern, right? If you take a line and you just kind of go from here, right, and grab that line, and you can see what I'm drawing, right? See an M pattern formation, and usually M patterns, they usually stop at that lower high, right? Otherwise, right there, and then here's your neckline again, and that neckline would be a confirmation of your M pattern, right? Now, if the market does rally today and hits at this high, then this M pattern would just be a double top. But I want you to realize and see that we are at these levels again. I would not be adding to any new positions that you have or taking any new longs right now until the market digests what this move is and where do we go from here, right? Technical analysis gives you an idea of what is to come, and sometimes it's wrong and sometimes it's right. Most of the times it's right. And right now, today will be the factor of GDP coming out would probably put the tone for where this market will be headed in the next couple of weeks. Okay, so be aware of that, guys. Very important. So we do have an M-top formation forming now. We haven't formed it yet because we haven't got this right side, right? This is just here right now. So this is something that we'll be watching in the coming days. Okay, now I just want to show you that 60-minute chart again. That fit 153.75 is still very well bid up in these areas, as you can see here and here, right? And go back, and there's that other gap area of support. Okay, now this head and shoulders pattern really basically giving it a head test, so to speak. So let's see if this starts to roll over today. The first area of support would be that gap area where we have here 156.80, call it. Okay, so 156.80 is what we'll be watching. The first area really we'll take a look at it will be yesterday's low, 157.95, and then of course Wednesday's low, which would be 156.80, and then of course 155. Let me bring that over here. 155.35, and then of course 153.75. So today's video, I wanted to give you some key points of support if this market were to explode. Now obviously resistance is going to be 159.63. That would be the head of the area of this inverted, of this head and shoulders pattern, excuse me. So you can see here that we're at 60-minute now. We're basically at lofty levels again. We're back up in here, and the RSI is well above 80% at 89 right now, and ever so slightly did it started rolling yesterday at the end of the day. And here's the 30-minute chart, just showing you with the fibs. We almost retraced. We almost had 100% retracement from the low. So you could just see what's happening here from April. All the way up, all the way down, all the way up. Now, what are we doing here? We're going to roll and make this again. You see my M formation, right? My M top. So this could be an M top, and then a break here would confirm this M formation pattern, okay, which is a bearish pattern. So this is what I wanted to show you guys today, and really to give you an idea where we're going to be headed in the next coming days and weeks. And I think the GDP is going to really dictate that. All right, guys, and the last chart is going to be our 30-minute spiders with the Bollinger Bands. Now, the spiders did manage to tighten, and we did get a move up. Not necessarily a big move that we were looking for. Something like this, when the Bollinger Band squeezed, we got a nice big move here. And then Bollinger Band squeeze, and we got a nice big move here. And now we just kind of consolidated for a day, and we got a little tiny move here. So all this has to do is kind of consolidate the Bollinger Bands again, and then we're looking for another big move. So just keep that in mind for today's trading. And again, keep it light. It is Friday. You don't want to get beat up going into the weekend and have to think about what what your mistakes were. Just a little word of advice. I usually hate to do that. I like to get 2-3 good trades in for the morning and then really kind of call it a day. And today may be the day. We've been really slow this week. So I like to let the trades come to me. I'm not aggressively looking at it because if I'm looking at certain setups that I'm doing my homework from the night before, and if they don't pan out, I don't just go blindly buy something or sell something, because that's not my preparation, right? You want to be prepared for the night before. So that's going to be really important. That's how I like to play things with my trading plan. All right, guys, be very careful. GDP coming out 8:30. Let's see what happens. Hope this video at least gives you some guidance for some key pivotal support areas. I'll have a big report on Monday, because today should be a really good day on deciding on if we continue higher or are we reversing and starting a little bit of a pullback. Have a great day and really enjoy the weekend, everybody. Take care.